Welcome back to the channel. So today we've got another episode, weekly price action journal, so a review of this week's price action. And before we get started, I think one of the things to touch on, which is super important, again around journaling, and you will always hear me harp on and really push the point, really stress the point about journaling. It is, in my opinion, the single most important element to your trading journey that will elicit the improvements that you crave in order to get to the destination of where you are, of where you're going. Journaling will highlight any deficiencies. It will give you the opportunity to reflect on those things, look for solutions, and also, more importantly, it will allow you to track the results of any changes, so that you get a comprehensive view of whether things are working or not. So, as I said, daily price action journals, weekly price action journals, super important. And then there are other facets of journaling which are key as well, weekly ASR, which I will get into at some point in a separate video. With that being said, around journaling, it's something that ICT has mentioned before. Now, some of you who listen to my channel will know I'm not a massive fan of ICT. I like his concepts. I don't particularly like him. And some of the rhetoric that he spews, I just think it's borderline ridiculous. But within the sort of deranged, childish outbursts, there are always elements of real gold that should be taken away. And I mean, ICT is not the only one who's ever mentioned this, and he certainly wasn't the first, and he won't be the last, around self-talk. Now, it's important to apply self-talk to your journaling. What was the best case scenario? Why was it the best case scenario? What happened? What key indicators occurred in the market? How did these indicators align with my trading plan or my model, or what have you? And communicating that within your journal from a positive, reflective standpoint is key. That you were there in the moment, you were living the moment, you were seeing it happen as the candles were printing. That will feed into your view of the market, and that repetitive behavior that you will look to instill every time you come to journal. The things that you have noted in previous journal entries will become standardized elements of your model, and you'll be looking for those things on a regular basis, and then there'll be something new. What you don't want to be doing is constantly strategy hopping. Now, do I believe you should strategy hop? Well, it's not necessarily whether I believe you should strategy hop. The reality is you will. And then you will settle on a strategy that suits you, the things that you want to see from the market, and so on. And again, that will come through journaling, because you'll see the same repetitive themes to what you're journaling will dictate the action that you will take next, whether you move on to a different strategy or what have you. But ultimately, you'll find home. You will find the strategy that fits, and things will move on from there. So self-talk is super important, and it's something that I adopt, and I think many others adopt, and it certainly elicited behaviors, changes to my trading models and plans and so on and so forth for the better. And so really important to do it. I do it with every journal entry that I make, until the point that you don't need to do it no more. So with that being said, we're going to kick into this week's price action journal, the things that I saw. And remember, just one last thing, when you self-talk, it's not as though you are fabricating the truth. A lot of the time, as you mature in your trading journey, you're not really self-talking anymore. You're actually just documenting what you see, because you are pretty consistent in what you look for in the market. And when those things present, they ultimately yield the results that you're after, and that's ultimately what you're going to focus upon when you come to your weekly journal at the end of the week. So, with that being said, let's continue. Let's get into this and discuss what I saw. Now, again, I've annotated the charts and everything prior to this, or certainly earlier in the day. Often trying to find the time to record can be a little troublesome. So, let's delve into this now. Hopefully, shouldn't take too long, but rich with value. So, following last week's price action. So I noted how the market had delivered to internal range liquidity and then ultimately external range liquidity, with the idea of the market closing bullish through this old high. So that's what we saw. The old high weekly was the high time frame draw on liquidity, and the market ultimately closed bullishly above that key price level. Okay, so because of that, this to me indicated that we could see a continuation in higher prices, which we did. And more so, especially if on the lower time frame we saw an overlaying fair value gap within this region here that was respected. So either repriced and rebalanced or left unfilled. Either one within this area here would support higher prices. So the outlook for the week was higher prices. Okay, so let me delete that. Let's add this image into. There we go. Okay, so dropping down to the daily. Let's just enlarge this a little bit. Oh, that's probably a little bit too much. Okay, so we had SMT at the lows here, which was ultimately what initiated this displacement higher to the high time frame objective last week. Okay, now when we look at this key price level, we can see that this was Friday was here, traded above, left this unfilled fair value gap here, so that was of interest in terms of supporting potential higher prices. Okay, so I noted this, how the market had traded through and closed bullishly, so here's Friday, above this key price level. Also to note, look at the down close candle body respecting this key price level of the old high weekly. So again, and obviously we had this unfilled fair value gap here. So again, all of that is supporting high prices, but ultimately it's confirming that the high time frame institutional order flow is still bullish. Okay, so the market expanded higher on Monday, as we can see here, confirming this fair value gap. Then we saw a retracement pretty much of Monday's range on Tuesday, but the market failed to trade into the BISI. So that in itself, so now since the SMT down here, high time frame displacement, unfilled fair value gap, still supporting the idea of higher prices, whereby the near-term drawn liquidity can be this high. Internal range liquidity, external range liquidity. Support from this level here, for me, some form of SMT target. So when we drop down to the 4-hour time frame, this area here is key to see, do we get the cracking correlation to support higher prices? So pretty simple on the daily chart, nothing really to overcomplicate in that regard. I was bullish going into the week, and I wanted to see signatures which would potentially support bullishness. Okay, so if we break down some of the 4-hour chart, what's key and what's important. So firstly for me is, I don't trade Monday, so we wait for Monday's price action to play out, where we had this high time frame expansion higher, confirmation of the true week open. So that's important to me. That's the first thing that's important to me now, to indicate an oversold or overbought market. The market trades down, where we create these equal lows, exact equal lows. Okay, but we've also now got this H4 range potentially, and I say potentially because what we want to see is SMT to confirm this range, in my opinion, and how I view the market. I'm not saying that that's how everyone else views the market, it's how I view the market. So the market's traded down on Tuesday. Then we've seen a consolidation confirming what would be a SIBI here. Then I've noted the higher time frame SMT at the lows with NQ, and the market has traded higher, displacing through the SIBI, closing above, which is important as setting a high of Wednesday. So now, if we are bullish, we've created this BISI H4 and this balanced price range. If we are bullish, this balanced price range should support price. If the market was to come down and close below here, then these relative equal lows are in the crosshairs. Okay? But if we are bullish following this SMT, and this was a model here, trade high prices, okay, for me anyway, then we should see a continuation of higher prices from this level here. Now, what would I look for personally for as confirmation of a continuation from this BCH4? I personally look for a 15-minute breaker. If I see a 15-minute breaker, now if the 15 minutes not clear, I will pan out to an hourly, and the aim is between the 15 and the hourly. I'll determine a breaker, ideally on the 15-minute to support high time frame alignment, so H4 M15. And that, if supported, would indicate to me that institutional order flow is bullish. We have symmetrical price action between all members of the index futures triad, and we're gonna see higher prices. So that's what we saw here, and then as we see, the market displaced higher through the previous day's high, which would have been previous day for Q3, targeting excuse me, true weekly open, and ultimately the high time frame objective, which the market traded through. Okay, so now we're into Thursday, where the market traded through, purged the liquidity above here, and then I noted high time frame SMT between Monday, Thursday with NQ. Then the market ultimately retraced lower, targeting the initial inflection point on the H4 time frame, which is this BCH4. If we are bullish, we want to see support from this level. If we're not, price will trade through, close below. That again would bring the relative equal lows into the crosshairs. So market traded down into this BISI, as we can see, bodies of the candles closing inside the BISI. Now ideally you would want to see that close above CE, didn't, so that could be an indication that we're going to see lower prices at some point. Could be an initial indication, but ultimately bodies closed within here, wicks did the damage, and the market ultimately repriced higher heading into Friday, where we closed just below the true week open for the week. Okay, so as we can see on the H4 time frame, the framework of seeing higher prices was here. support of key imbalances indicated higher prices, and then ultimately the market delivered to the higher time frame objective. So in theory, once this had been purged, that is your indicator to move to the sidelines. No real need to get involved with Friday. No need at all. If you're looking for bullish price action, you're potentially getting something in here. Certainly, potentially getting something in here. Higher prices. But what I'm more so breaking down, not so much the trade, but the variables that constituted in seeing high prices to the high time frame objective, or drawn liquidity, if you will. Okay, that's the key element here. And even if there was SMT here, which I don't believe there was, again into the near term H4 inflection point, and then higher prices. So let's drop down to the hourly, give a summary of what we see here. Okay, so as we mentioned, we keep it brief on the individual days, but market opened and immediately displaced higher, leaving unfilled BISIs relative to the H1 time frame, supporting the idea of higher prices. Okay, so this was on Monday. Traded through what would have been somewhere around here, previous week's high. And yeah, we could use standard deviations to determine, well, how high is this going to go because of the fact that we're at all-time highs. But another alternative is to just use NQ. NQ hasn't purged its all-time highs, which sort of supports the idea that NQ is overbought. So therefore, if we're looking at imbalances and so on above the market of NQ, that would give an indication as to when potentially ES is going to stall out. Okay, but ultimately traded higher, set the high of the day, and then we saw this little consolidation for the remainder of the day. So then we head into Tuesday. The market sets the true week open, key price level. That's important. Ultimately, want to be buying below or selling above, and then trades lower to set the SSL London. Right. Then we see this consolidation slash slight repricing higher, where the market purges BSL H1, setting SMT with NQ, low time frame SMT with NQ, and then the market ultimately displaces lower. Now, for me, this isn't a model, but for others, it would have been. Okay. And the question may be asked, well, why is it not a model? For me, I need some high time frame context before I get into a low time frame trade. So market displaces lower below the true week open to set the low of the day. Right there. But as we noted in I think it was the H4, maybe even the daily, the market failed to trade into this BISI daily here. Support the idea that we may see higher prices if we get the right framework. Okay. So we head into Wednesday with the market trading below the true week open. Okay. Then we see this repricing lower to set the SSL London again, so a key liquidity pool, before repricing higher and creating this relative equal highs. So we kind of know that these relative equal highs are going to get purged at this point. We then see the market reprice lower, take out the H1 liquidity pool, which is an element, it's part of my model, sets SMT at the lows, high time frame SMT at the lows with NQ before displacing higher. And interestingly, we would have a H4 inflection point somewhere around here as a potential near-term draw. So the market trades higher, sets the high of the day, and then reprices back into this now formed BISI H4. So we've now confirmed the BPR H4 and the BISI H4 to close out the day. So then we move into Thursday. The market trades just below the true day open within this BISI H4 before finding support. So again, what would I look for in here? A 15-minute breaker. That is the first thing I'm looking for confirmation of higher prices. The market trades higher, purging ultimately previous day's high of Tuesday here and purging the higher time frame drawn liquidity, where we ultimately set the high of the week. We then get this rejection from this key liquidity pool, where I note now this high time frame SMT with NQ, where the market then, which ultimately will set the stage for lower prices. Again, it's how I look at the market. Everybody's different. It's how I look at the market. The market displaces lower. We know that because we have this CBH1 here. So we displace lower. And ultimately we have this aligned BISI. Now I've marked out the low of that BISI. But we have this aligned BISI here. The low of the gap is what I've marked out. And the market trades to and through and closes below. That confirmed lower prices for me for this day. Okay. The market then repriced higher, back into the CB, into the high probability bearish order block before repricing lower to take out the SSL New York AM session low liquidity pool. We then see this consolidation taking place for the remainder of the day. Okay, bear with me. Okay. So then we move into Friday, where we've noted that the market has traded into this BISI H4. Okay. You got the previous day's low here. We are within this BISI H4 before the market opens and reprices higher. It actually displaces higher. We see the displacement confirming this BISI H1. But also, because we're inside of this BISI H4, we see this bullish breaker H1. Not M15, but H1, which to me confirms support from this key price level. The market ultimately, excuse me, the market ultimately continues to reprice higher, sets the New York high of session before repricing lower. Prices higher, sets the New York high of session before repricing lower and purging this SSL H1, which you can just about see in here, whilst trading down into this bullish breaker again and confirming PDA SMT with this level here with the bodies of the candles respecting this BCH1. So there's a lot of things going on there, which is important. We have SMT with NQ, PDA SMT with NQ. Why PDA? Because we're looking at this BISI. We've got the bodies of the candles supporting higher prices, not closing below mean threshold or anything of that nature. We have SMT down here, and ultimately that's the catalyst for the market to reprice higher and then ultimately close for the week. Closes just below the true week open. So that's a general overview of each day. What happened? What key things occurred? For instance, here where we've got the market repricing higher, confirming the high probability order block. Market trades back in here. That's a long there. It's a model. So next thing for everyone to do is, once you've done that, go through, make sure you're making notes as you're going along, and document down key takeaways. Key takeaways are things you've observed that could be positive, things that you observed that could be detrimental, and make the necessary changes that you see fit. That's how you'll improve. So hopefully you took something away from this. I kind of wanted to sort of get to the point as soon as we got to the charts. Hopefully there was something you took away as well from my early sort of commentary. So yeah, complete your weekly journal. Make sure it's done. Try and make sure it's done before the start of the new week, because you typically tend to find that once you get to the start of the new week, and ideally before you start your weekly outlook for the new week, you tend to not come back to this. So try and get this thing done. Ideally, you want to do this on a Saturday. I'm doing it late this weekend because we travelled yesterday. So the first thing I wanted to do this morning was sort of get the annotations and stuff done, and as soon as I had a suitable time, obviously do this recording. So hopefully you've taken something away. You can see, you know, some people may say, there's a lot of lipstick on this chart, but as long as it makes sense to you, that's the important thing. So hopefully I've explained how I looked at the markets this week, what I observed, and maybe there's something that you've noted that you feel that's useful. I never thought about that. I understand why and how he looked at it that way, etc., etc. So hopefully there's something in there for everybody. But on that note, I'm going to leave you guys for the remainder of your weekend, and I will catch you guys in the next one.